Something very interesting is happening beneath the surface of this market right now. While fear around XRP and altcoins keeps growing across social media, capital flows, liquidity conditions, ETF rotations, and sentiment data are all starting to hint at a possible shift. According to recent reports, money is rotating out of Bitcoin and Ethereum ETFs, XRP-related funds are absorbing major inflows, altcoin market structure is improving, XRP sentiment has turned deeply negative again, and Binance liquidity conditions are reaching levels that previously triggered explosive moves. Meanwhile, developers inside the XRP ecosystem are reportedly becoming increasingly bullish despite weak price action. That combination gets very interesting, because historically, the market often turns when the crowd becomes most convinced nothing good can happen. Let's break this all down. Nothing in this video is financial advice. This is for education and entertainment only. Always do your own research before investing in crypto or digital assets. Welcome back to Ledger Pulse, the channel where we break down the biggest developments shaping digital assets, tokenization, institutional finance, and the future of blockchain infrastructure. If you've been watching this market closely, you already know the loudest narratives usually appear right before the market changes direction. And right now, fear, skepticism, and uncertainty around altcoins may actually be masking a much larger setup forming underneath the surface. One of the biggest stories this week involved ETF capital flows. According to reports shared across the market, Bitcoin and Ethereum ETFs saw significant outflows recently, while Ripple and Hyperliquid related funds reportedly absorbed hundreds of millions of fresh inflows. That's important, because whether people realize it or not, capital rotation is how new phases begin. Markets rarely move straight upward forever in one sector. Eventually, liquidity rotates, narratives shift, and traders begin searching for asymmetric upside elsewhere. And if institutional capital starts rotating beyond Bitcoin and Ethereum, that could become one of the most important developments of this cycle, especially if regulatory clarity around altcoins continues improving. Another interesting discussion focused on the broader altcoin market structure. Several analysts pointed out that the others chart, which tracks a large portion of the altcoin market outside major caps, appears to be reclaiming higher timeframe support after sweeping previous lows. Now, whether or not that exact chart plays out, the important part is the psychology behind it, because many altcoins have spent months underperforming, losing momentum, and draining optimism from retail traders. That creates exhaustion, and historically, exhaustion phases often happen near major turning points, especially when positioning becomes heavily one-sided. The market tends to move in the direction that causes maximum frustration, and right now, most participants still seem positioned defensively towards alts. Sentiment reported another major shift this week. XRP crowd sentiment has reportedly swung sharply negative again across social media. Historically, that has often acted as a contrarian signal. According to the data, previous periods of extreme fear and skepticism around XRP frequently occurred near local bottoms or stabilization phases. That doesn't guarantee a rally, but sentiment matters because markets are emotional systems. When weak hands exit, fear spikes, and social confidence collapses, selling pressure can eventually begin drying up. And ironically, some of the strongest moves often begin when the majority least expects them. One of the more fascinating posts this week involved XRP liquidity conditions on Binance. According to the discussion, XRP's 30-day liquidity index dropped close to extremely low levels. Now, why does that matter? Because low liquidity environments can create explosive price conditions. If sellers become exhausted, order books thin out, and aggressive buying enters unexpectedly. Price can move much faster than people anticipate. That doesn't automatically mean XRP is about to explode upward tomorrow, but structurally, low liquidity setups can become highly volatile once momentum returns, especially in assets with large retail attention and deep derivatives participation. Another technical discussion focused on XRP's short-term resistance zones. Analysts highlighted stacked sell order blocks overhead, particularly around the $1.40 region. Now, regardless of whether someone follows technical analysis closely or not, these levels matter because markets are heavily psychological. If price repeatedly fails at resistance, confidence weakens, traders become hesitant, and momentum stalls. But if those zones eventually break, the exact opposite can happen. Short sellers get trapped, momentum accelerates, and sideline buyers rush back in. That's why so many traders are closely watching these levels right now. not because resistance guarantees rejection forever, but because breakout conditions often build quietly before major moves occur. One of the more overlooked developments came from discussions around XRP developers and ecosystem participants. According to reports circulating this week, some developers inside the ecosystem are reportedly becoming increasingly bullish despite ongoing price weakness. Now, this is important because builders often see infrastructure trends before retail traders do. Developers pay attention to integrations, partnerships, tooling, institutional interests, and ecosystem growth behind the scenes, not just daily candles. And historically, infrastructure expansion during weak sentiment phases can become very important later in the cycle, because by the time broader public notices, the groundwork has already been laid out. Another massive macro discussion this week centered around reports tied to Trump's fintech executive order and direct access to U.S. payment rails. Now, if parts of these proposals eventually move forward, it could significantly reshape how crypto firms interact with the banking system. Some analysts believe this could reduce dependence on legacy intermediaries and potentially open the door for faster blockchain-based settlement infrastructure. And naturally, XRP keeps getting mentioned in those conversations because Ripple has spent years positioning around cross-border payments, liquidity infrastructure, and settlement efficiency. Now, to be clear, none of this guarantees adoption, but the direction of this conversation matters. Because a few years ago, the discussion was, will governments even allow this industry to survive? Now, the conversation is, how do we integrate digital assets into financial infrastructure? That's a very different stage of the market. When you zoom out and connect all these developments together, a larger pattern starts appearing. ETF rotation, altcoin market stabilization, extreme bearish sentiment, thin liquidity conditions, institutional infrastructure expansion, developer optimism, and growing conversations around payment rails and financial integration. This is exactly the type of environment where major market transitions quietly begin. Not when everyone feels euphoric, but when skepticism is high, confidence is weak, and most people have already emotionally checked out. Because markets usually bottom in despair and top in euphoria. And right now, fear still appears to dominate the altcoin conversation. So while social media debates whether altcoins are dead, the underlying structure of the market may already be shifting again. Capital flows are changing, infrastructure keeps expanding, sentiment remains deeply fearful, and institutional participation continues growing quietly underneath the surface. The next phase of the cycle may not start with excitement. It may start with disbelief. If you enjoyed this breakdown, drop a like, subscribe, and let me know in the comments. Do you think the altcoin rotation is already beginning? Or does the market still need one more major shakeout first? If you want to dive deeper, check out these videos here. Thanks for listening, and we'll catch you in the next one.